Hi everybody, it's Peter Brennan here, and today I'm going to talk to you a little bit about gold. I've been following gold for a long time, and I've two ways. There's two ways I look at it. There's the long-term view and the short-term trading. Now, looking at it on a longer-term view, you can see over the past few years I've owned gold since about 2000, and on a long-term trend, gold's been doing really well. And this is a monthly chart here. Let's have a look at a weekly chart as well. Still looking good. Daily chart, still looking good. What we're seeing is higher highs, lower lows over the past couple of years and the past months, and gold has been doing really well. Now, sometime last year, it peaked out there around 12.32, and then it went into a long consolidation period, and now to me this is just a projection. It looks like it's building up steam for another move higher. Now if it does go higher, I'm not saying it's going to go higher, I'm saying if it goes higher, I wouldn't be surprised to see it run all the way up to 1200, sorry, not 1200, 1400 and 1600, to who knows where. I mean, the strategy is, you can divide your strategy up into two. Long-term trading, get in at a reasonably low-risk entry point and try and stay in the trade for as long as you can. And then the short-term trading, which I'll talk about in a moment as well, which is where you go in and take some points out of the market on a consistent basis. So, to conclude then, on the long-term stuff, there's nothing in the chart to say that gold's move is over. Monthly trend is still up, weekly is still up, daily's looking reasonably strong. Now, for a trend trade, you need to bear in mind that gold does have seasonality, so it's typically weaker in the summer, and then in the autumn or spring periods, it typically shows a trend move. It's also interesting to note that the correlation used to be gold versus the dollar. So when the dollar was weak, gold was strong, and vice versa. And lately, what we've seen that correlation change, so that when the dollar's been strong, gold has been strong as well. And I think that was due to the fact that we had a lot of issues with the euro, a lot of issues with banking concerns around the world, and gold is the ultimate safe haven currency, especially strong during times of inflation. Now let's switch track a little bit and talk about short-term trading of gold. Here's how I like to short-term trade gold. I'm looking here. I have a 15-minute chart, a 60-minute chart, and a 4-hour chart. And typically, gold is very, very volatile, so it's good for short-term trading. And in my trading of gold, I like to use some methods. One method, for example, would be to use bounces off the 900 SMA, which tend to work pretty well. And I would use, for example, a 2 to 3 point stop and a 10-point profit target. So if I scroll back a bit, you can see I'm struggling to see it here, and maybe I'm looking at the wrong chart. One moment. So for example, on a 60-minute chart here, you can see gold coming off the 900 SMA very well. So here, if I was playing this, what I would do is I'd have a reasonably tight stop, 2 to 3 points. A little bit of flexibility is necessary on it because you'll get wicks on the candles, which will blow out your stop if it's too tight. And then use maybe a 10-point profit target. And what you're doing there is you're going in and you're pulling some points out of the market, and you've got a good risk-reward ratio for your trade. So with a ratio like that, where you've got a 2 to 3 point stop and a 10-point profit target, you only need something like less than 20% of your trades to work for you to make good profits. Okay, thanks for listening, everybody.